When people think about savings, many people will immediately think of cash. This is because cash has historically been a fairly safe bet. Cash savings are protected from fluctuations in the stock market, they tend to grow over time, and they're always available to use in emergencies. The problem with this approach comes when interest rates are low. In reality, they've been low since the 2008 financial crash, something that the pandemic has only made worse. As a part of the response to COVID-19, the Bank of England has set its base rates at 0.1%, and there are seemingly no plans to raise them anytime soon. In times like these, when interest rates are low, cash savings can actually lose their value over time as inflation takes hold. If prices grow more quickly than your savings do, the value of your pot erodes away gradually over time. Before we look at alternatives to cash, let's define exactly what we mean by inflation. To put it simply, inflation is when the price of goods and services rises over time. As prices rise, each pound or dollar has a smaller buying power than it previously did. This means that £5 in 1980 was worth a lot more than £5 is now. It's actually closer to £20 in today's economy. So to keep your buying power consistent, the value of wages or savings needs to rise in line with inflation. If cash is no longer a safe haven as it was in the past, where can people turn to protect and grow their wealth over time? We believe a fully diversified, actively managed investment portfolio is the answer. Looking at long-term expected returns of assets like equities and bonds, we think that the probability of delivering positive returns is good. The problem is that this growth isn't always straightforward. Individual assets can go up as well as down, particularly over a short time horizon. So the key here is to identify the right asset mix for your risk level and to avoid short-term thinking. When you invest with a wealth manager like Moneyfarm, you'll be paired with a portfolio that suits your goals, your financial position, and your attitude to risk. After these have been established, you can leave the rest to us. The goal is to beat inflation over the long run. We monitor the markets daily, making changes to our portfolios where necessary to make sure that they stay fit for purpose and ahead of the curve. It's also important to remember that investing in some ISAs is less of a commitment than others. At Moneyfarm, for example, our ISAs are easy access, which means you can disinvest from them at any time to access your money quickly. People tend to associate financial markets with volatility and risk. While it is absolutely possible to lose money by investing, we believe that the opportunities far outweigh those of more traditional methods like cash. When you invest in the stock market, there's a chance you'll lose money. When you hold cash in times of high inflation and low rates, on the other hand, you're guaranteed to lose out over time. Cash is no longer king, and savers should consider their options before making any decisions about their long-term financial future.